Good afternoon, everybody. Happy Sunday to all of you up here in the Panhandle. Welcome back to Eating the Elephant, where we take this big elephant known as Hurricane Michael recovery and we break it into bite-sized pieces for you. We're going to talk a little bit about recovery tips and give you some insurance information as well. And today, I had sort of hinted in a Facebook post earlier in the week that we would talk about what to do with your insurance right now. There's an awful lot of folks that have the issue of they're staring at a rubble pile and they may still be paying some pretty big insurance premiums. And the question I think for everybody is, well, what now? Do I still need insurance? Can I cancel this? Can I save the money? Do I still have some concerns? What's my lender going to say? And I think those are good questions, and I think they're mostly fairly easy to answer. And what I will say is that it really depends on your situation, and we're going to go through a few of those situations right now so you can make a better decision. Hopefully what you will do is you will talk to your agent or insurance provider. You'll involve your lender in the conversation if you have one, and that way you can make the best decision, because this is going to be a decision that you really can't undo. Most of the things that you will decide on, whether it's hiring a contractor or deciding on what new color carpet you want in your home, a lot of those decisions, once you've made them, you still have some sort of time frame to unwind them. But if you decide to cancel your insurance, that's going to be something that's very difficult to unwind. Chances are you still need some kind of insurance, and there's a lot of reasons for that. The first question is, if your house is damaged but not totaled out, you still have damage. I mean, you still have insurable value in the home that you still do have. What parts of your home that are left standing and undamaged, those need to be insured. And as the construction process takes place, you're again adding value back to the home gradually, and so you'll need to be sure that the part under construction is insured as well, because if you were to have damage during the construction process, it's going to cost you just as much as if you'd had damage to the previously undamaged portion of your home. So I think that's a consideration. You may still have undamaged portions of your home that need insurance. If you're staring at a rubble pile and you're bringing in bulldozers, you may have a very different situation there. But you still have some concerns and some issues that you need to consider before you go down and you sign that cancellation form. The first thing is you're still going to need some liability insurance. Now, I will grant you that paying for a homeowner's policy is not necessarily the best way to get, or it's not the most economical way to get liability insurance. But something that you need to think about, we've already had an incident where we had one of our clients who, I don't think they're going to be sued, but they certainly have the exposure where a child was playing or was somewhere they weren't supposed to be and was injured in a pile of rubble. Stuck a nail through his foot, emergency room visit. The kid's going to be okay, but it certainly could have been a lot worse. And even though the kid was trespassing, 9-year-old boys don't get too concerned necessarily about property lines. And you have to remember that when a house is in the condition that some of these are in, where they're open to the elements, that can be very attractive for young kids. And it's something they've never seen before. Kids are naturally curious, and if they come onto your property and they're injured, then you have a liability problem. And when that kid is injured, if it's very, very serious, the parents are going to look to you. That may seem unfair, but that's the way the law works. So liability coverage is an issue. Even if we're not dealing with something at the home, the personal liability coverage that's on your that's on your homeowner's policy, is very, very broad. We had a claim filed not very long ago by someone that was pulling a very heavy piece of luggage off a baggage carrier here at Northwest Florida International Airport, and they injured someone, messed up their knee pretty bad. That was covered by the liability coverage on the homeowner's policy. If you have pets, obviously you took them with you. If your dog or your cat were to bite or scratch someone, that would likely fall under your liability coverage as well. So you still need some liability coverage. Not to say that the homeowner's policy is the only place to get it, and before we cut this off this evening, I'll give you a couple of other options. Where are your contents? Did you hire pack out? Did you move them to a pod unit that's still on premises? Are they somewhere far away in storage? That kind of the stuff that you have left, that needs to be covered as well, and that would still be covered under your homeowner's policy because you've removed it in order to protect it, and therefore it's automatically covered regardless of where it goes. So again, that may not be the most economical way, but it certainly means that you already have coverage in place, and if that stuff were to be damaged, then you would still have insurance on it. There are other options. Let's say your house is completely destroyed. You're not staying on the property. Let's assume for a moment that you are renting an apartment or a home, if you've been lucky enough to be able to find one. You could always go get a renter's policy on that. You can get what's called an HO4 policy from your current agent, and that would cover whatever contents that you need. Even those that are temporarily away, you need to discuss that very specifically with your agent to make sure that contents off premises are covered for enough. It would also cover your liability. And so those are very, very important things that you need to discuss with your agent and get some really solid advice. If you're living in an RV on your property, the homeowner's policy you have in place certainly would protect you from a liability point of view, but what wouldn't be protective is the RV. And you would have to get separate coverage on that RV or a trailer, whatever it happened to be. And that's not hard to do. Most agents in town can do that. It's a relatively simple matter and reasonably inexpensive depending on the value of the trailer or the motorhome or whatever you're staying in. I think it's important for everyone to know that if you have damage from the hurricane, your insurance company in most cases cannot cancel your insurance or cannot refuse to renew your insurance because of an emergency order that's in place and has been in place for quite some time. You have until 90 days after all of your repairs are made to keep this insurance in force. There are certainly exceptions to that. It applies to almost all homeowners, and it applies to some commercial structures, but what we have seen from our commercial insurance companies is they've been very cooperative. They understand that there's damage. That's not something that they would want to take on brand new, but they know that you need to have coverage through the construction process. And I'll tell you, if you cancel your current coverage and you have damage on your home, one of the questions that's going to be asked by a new underwriter is there damage to the current structure? And if there is, it's going to be very, very difficult to find someone to write this brand new. They would expect you to maintain your current or past insurance through the construction process, and then when that's all done, then you can cancel to make some changes. I know that can be especially frustrating for those of you out there that may have severe damage to your home, and you may be having a really hard time with your insurance company, and you get this bill for renewal and you're very frustrated and angry. You still need to pay that bill, unfortunately, in many, many cases. Getting something brand new on a badly damaged home is just very, very challenging for us right now. There's some exceptions, and I'll come back to those in just a second, but while I understand your frustration and while I understand your desire to not want to do business with a company that has not served you well, don't cut your nose off to spite your face, I guess is the way my grandfather would have put it. You may be frustrated, but it still may be the best move for you at this particular time. So don't make a rash decision when you're angry or panicky. Think this through. Hopefully you have a good agent that can give you good solid advice on what's to be done. You also have issues with lenders. If you have a lender, a mortgagee on your property, then if you cancel all your insurance, your lender's going to get a little panicky, and what they will do is they are then entitled to force-place insurance for you. They buy the insurance on your house that covers only the lender's interest, and it's very, very expensive. They add those charges to your escrow account, and almost in every single case, you can find insurance that's better with a better company and that is less expensive. Lender force-placed insurance is almost never, ever, ever a good option. So again, engage your agent, ask good questions, and see what's right for you. There is one thing, and I'm going to kind of close with this. If you have a damaged home, particularly if it's very severely damaged, what you might be better off doing is getting what's known as a builder's risk policy. A builder's risk policy is sold on a dwelling or a building under construction. You're under construction, even though it's not like a conventional ground-up building project, but even if you're only rebuilding half of your home or a portion, you can still get a builder's risk policy. What you need to do when you talk to your agent is you need to do a couple of things. You need to give them the value, and it's just going to be an estimate in most cases, of the current structure. What's left? If you had a $200,000 home and half of it is very, very badly damaged, then maybe what you have is $100,000 on your current structure. You'll also need a number for the value of the additional building. So based on what we just said, you would think maybe $100,000. I think that's going to be very inadequate because, as we know, construction costs have soared completely off the map. during this process. So you may have $100,000 in the value of your current structure and maybe $150,000 or $200,000 in the project underway. So you would have a total amount of insurance of $300,000 in that case, and that's what you would want to tell your builder's risk agent. In addition to the builder's risk policy, and this is very, very important, that only covers your property. That only covers the building. It also covers the theft of building materials, which is very nice because that has become a significant issue. Lots of bundles of shingles and plywood and things like that have disappeared from job sites. Theft of building materials on a job site is covered under a builder's risk policy, where it would not necessarily be covered on your homeowner's policy. So, again, this is for just the structure. It doesn't cover your contents, which would be covered under some other policy, hopefully maybe an HO4 renter's policy, or you may be waiting to buy a bunch of things until you get back in your home. But you still need liability coverage, and there's a couple of ways you can do this. We have had a contractor tell a client, oh, don't worry about that, I have liability insurance, and we'll add you onto my policy as an additional insured. Well, that is something you absolutely should do, but it is not sufficient. You need liability coverage of your very own in your name. It can be under what's known as a general liability policy, a comprehensive personal liability policy, or in some cases, it might be appropriate to place what's called an OLNT policy, which is owners, landlords, and tenants. You don't need to get caught up in all the verbiage and all the tech speak. What you need to do is find a good agent that can give you good advice and can explain these issues to you and find you the appropriate coverage with the appropriate company to get you back where you need to be. Bear in mind that your short-term solution to your insurance problems may be very, very different than your long-term solutions. You will be able to reevaluate your entire situation once your repairs are done, once you're back in your home, and things get somewhat back to normal. If you are going to cancel your current coverage, again, do so with great care and great caution and hopefully with some good advice behind you. And you will need to make you'll need to sign a form for that. There's what's known as a cancellation form or lost policy release, an LPR in our terminology. And all you need to do is ask your agent to provide it to you. They can probably email it or fax it to you if that's easier for you. Or better yet, you can swing by their office and sign it at your leisure, and they will cancel the policy, and you should be refunded the unused portion of your premium. If you paid $2,000 in premium and you're 6 months into your policy, when you cancel it, you're absolutely entitled to a refund of $1,000. There shouldn't be any issues with that whatsoever. That's going to do it for us for this week. Again, use caution when you decide to cancel your policy and be sure you get good advice. Hope everybody's doing better this week than they were last week, and I hope you'll keep your head up looking forward instead of looking down. We'll see you this week on Wednesday. Thanks.